Hey folks, welcome back to the channel. I want to give a quick update on my gold trade, as well as share where I think the general stock market could be doing in the next couple of weeks. In an earlier video, I mentioned the relationship between the price of gold and the S&P 500. Looks like it could be hitting a top. So I put in a trade strategy at the end of this weekly red bar here, where I shorted JLD and went long the SPY. And the plan is either to get stopped if this ratio goes back up here to the top of this candle, or wait a month and take profits if this ratio continues to go down. It's been a couple of weeks so far, and I'm up a little bit on this trade, and I will continue to look at what the RSI is doing and give it another couple of weeks. Now, moving on to the S&P 500, we can see the price is at a key zone right now. The black line here is the 200-day exponential moving average. We're looking at the daily chart here, and the price has basically been consolidating for the last week, sort of trading within this range, and whichever way it breaks out of will likely be the next big move. About a week ago on May 1st, this red candle here, I put out a video saying it's likely, at least in the short term, for the stock market to get some kind of pullback because it's gone up 8 days in a row. So there's probably going to be some price exhaustion. And I was basing it off of this statistic from Subutrade on X, going back about 100 years looking at the S&P 500 data, and picked out all the times where it was up 8 days in a row while under the 200-day moving average, like it happened this time. And as you can see, the short-term performance immediately after this event doesn't look very good for the bulls because it happened 8 times before, and out of the 8 times, only 3 times it was positive the next day. But by the time the second day rolled around, it had always been lower than the end of the 8th day. So based on that data, plus the rejection of this candle off the 200 EMA, I mentioned if the bears wanted to drive the market down, this is probably the best place they could do it. Otherwise, the market would go higher and they would have to wait until this level around 5,800 before they could try again. But of course, now we know that was not how the market played out. The bullish momentum still has some juice left for one more day. That's this green candle here on May the 2nd, before finally having that pullback, at least down to the green 9 EMA. And so what ended up happening was one day after, the market was up, and even 2 days after, the market was still up. So this is the results of the 9th time that the market was up 8 days in a row. And we have positive numbers all the way up to 1 week later. We don't have the 2 weeks later yet result because that's the end of this upcoming week. But by the look of it, things are pretty bullish. This marked the first time out of 9 that 2 days later, the market ended up being higher than the reference date. So this goes to show that there are patterns in history, but there's always a chance things can be different this time. So only make trades where you have stop losses so that you can still make more trades later. And I did mention in the last video, if the market does manage to continue to go up instead and break above the 200 EMA, then that would be more of a bullish sentiment. And even though right now it's sort of consolidating just in this range around the 200 EMA, if I had to make an educated guess, I would say it's more likely for the market to continue going upwards when it breaks out of this range. One reason is because of technicals, just all of the EMAs are heading upwards. You can see the green line, the 9 EMA, the blue line, 21, the 50 are all pointing higher. The only one that's kind of flat, maybe even down a little bit, is the 200. But as long as the price remains above the 200, then eventually it's going to curl upwards as well. And that is usually bullish for the market. As you can see previously over the last couple of years, the price has been, for the most part, above the black 200 EMA. And it was really only this year that it fell below over here. And when it went back to retest it, it only spent a few days up there before crossing back down, and that's likely part of the reason why there was this big sell-off in April. So because right now we're still above the 200 and it's also bouncing off the 50 and 9 EMAs, there's a slight bullish tilt to this market right now. And also, again, looking at historical data, this time we have a lot more examples instead of just 8. We have about 20 examples where the stock market gained 13% over the last month. And when that happens, as of the end of last week, the odds are pretty good, 2 out of 3 times that the market will go higher over the next week. Longer term, it's a bit more complicated because 2 weeks after, you have a lower chance, only 62% of the time the market was up. So that's why I think, unless there's any really bad news, that comes out, the market should continue to edge its way up. The one thing to keep in mind is that because we're in this consolidating stage, the next big move in the market, whether it be up or down, could be fairly violent, like basically what we've seen over here at the end of April or over here at the end of March. So what that means is if you have any trades that start from inside this channel, and the market goes against you in the opposite direction, you want to keep your stop losses fairly tight because the S&P 500 could easily hit 5,800 sometime next week. And similarly, there's a lot of gaps that the market will likely fill eventually on the downside. So if it breaks down to the bottoms, then this would be like a double top situation. And we are likely to go to 5,500 very fast because that would represent basically a doubling of this channel. Also, from an intermediate perspective, this would appear to be another rejection off the 200-day EMA, just like before, and will likely get another waterfall-like price action in the market. Because not only is it getting rejected off this 200 EMA a second time, which is even worse than the first time, but it would continue this pattern of making lower lows and lower highs, which means the overall trend is heading downwards. So that's why I'm saying, like, intermediate term, we're not out of the woods yet, but at least short term, as long as the price can remain above the 200 EMA into the next week, we'll probably get another week or two of steady or higher price movement in the markets. So that's it for now. Thanks a lot for watching, and I'll give you guys another update next week.